streaming live from Long Island, New York. It was an absolutely delightful fall day, a little crisp air, but sunny, and it was really nice to be outside today. I know I'm coming to you late, but it's a market wrap for the week, so plenty of time to catch up and check out what I have to say. I have a lot to say about the Dow Jones Industrial Averages, the NASDAQ 100, the S&P 500. Throw in Apple and a biotech that caught my eye, AMRN. So we have these five names to look at tonight, and my view on the tumult in the marketplace going forward. As always, do your own due diligence. I want you to know my opinions are strictly my own and that they do not constitute investment advice. And if you like the video, tell your friends about the vlog, subscribe, write a comment, like us. Let's get to the charts. Hope you had a good day today trading. I know I did. It was a rebound day. All right, but it ain't over until the fat lady sings. Or as Yogi Berra said, it ain't over till it's over. You didn't know Yogi was a philosopher, huh? Okay, we'll start by looking at the NASDAQ. Nice bounce up today after being lower earlier. So we closed up 193.18, or nearly 3%, 2.75%, 2.75%, a nice move up. But notice we moved up to a horizontal trend line, a point of resistance, support. So I wouldn't get too excited unless we break through this. As of now, we're at resistance. And we actually went down to support. So we transversed the entire channel today with this 193-point move to the upside. Let's look at the low. The low was 7,019. The high 71.79. So you can see that 7,000 level was touched. And the 71.57 resistance level also touched. So we didn't prove too much today, other than we had a bounce back day. That's how I look at it from the NASDAQ. I think it's going to be very, very similar for the Dow and the S&P. At this point, I'm venturing, if I had to guess, a little less volatility on Monday, with a trading range between these two lines. So I'm looking for several days like we had back in June, late June, where this becomes the range between 7,000 and 71.57. Tight range, but a NASDAQ. But I think we'll get a couple of days like that. And then it'll either go down some more or break out. We'll have to decide on Monday. But for now, let me tell you what I think. I think we've had a first leg down, where we've had a second leg up. I think we'll get some up and down movements, maybe a little bit above the line, a little bit below the line, between the two lines there. And then I think we will get a third round down later in the week. So I don't know how far down, but I do think it's not over. That's how I feel right now. The correction is not over. The Dow Jones Industrial Averages. So if you still own those VIX calls, maybe you should keep them, maybe. Perhaps. The Dow Jones closed nice, up 1.15%. Or 287 points to 20,600. 5,339.99. Now notice this candle got support right at the 25,000 level. And in order to really catch my eye, it would have to come back up to the 50-day and go through it. The 50-day is up around, well, right now it's up around 25,989. It's going to come down a little bit as the Dow trades below it. So it's got to go above the 50-day and break that resistance level. So I'm calling the 50-day the resistance, and I'm calling 25,000 support. Support. So hopefully it doesn't break below that 25,000. But I actually think it will. I think it'll go up towards the 50-day, maybe meet it at 25,800 in a couple of days on Monday, Tuesday, Wednesday, and then come back down to this trend line at about 24.3, something like that, or lower, 24.2, or maybe even 24 even, this support line. So I see the Dow going up a little bit and then back down, just like the NASDAQ. The S&P 500, and after that 1, 2, 3, the 1 down, the 2 up, and the 3 down, I think we will be good for the rest of the year. I think this is just a correction, but I don't think we're done with the correction. The S&P is something similar. Okay, we're up 38 points, 1.42% today, better than the Dow, to 2767. Let's take a better look. Okay, it's an inside day, inside the previous day. It's a hammer, which is a good sign. So I just like the Dow and the NASDAQ, I expect some continuation of this rally on Monday. But I think it'll meet resistance right about that 2,800 level and then start going down. So I don't know when that'll happen. It might happen Tuesday or Wednesday that it hits close to that 2,800 level and then closes the week heading back down towards that 2,700 level. So I think we're looking at about 2,700 to 2,800 range on the S&P, 100-point range. And I think it'll probably stay in that range up until the end of the correction. So the S&P might go down to like 2689, something like that, before this thing is over. About 100 points, a little less than 100 points from where we are now. Amarin is an interesting biotech. I said yesterday that I expected it to trade within this triangle, at least for the next few days. Well, it poked its head above the triangle, said the air is too thin up here, and came back down to stay in that triangle. And I think you'll see more of the same tomorrow and Monday and Tuesday and Wednesday. We will break out. We have to break out probably midweek. It'll be either in the low 20s or heading back down to 15. Not sure which, but it certainly can't continue. We have a time limit here. Let's see, when is the time limit? 10:22. Today is 10:12. So it could continue conceivably for a few more trading days. Apple Apple had a very nice pop today. It was up 3.5%. This very strong stock. Dr. J has been touting its virtues. We're salivating at the prospect of maybe getting it at 195. But today it ran away to the upside. Very strong, but notice it stopped where it's supposed to stop, right at this trend line. I know it's an ascending trend line, but it did what it's supposed to do. It went up to that trend line and stopped. At this point, I'm not sure what it's going to do. It very well may bounce off that trend line in a sideways direction for a few days. Probably go up the ascending trend line, climb it to about 228, 227, something like that, maybe touch above it, and then start going down again. And this time, if it goes down, maybe we will get to that 195 level. So by the time it's all over, we still could see a 27-point shake, 27 points from here, shaving off the price of Apple. And I think Dr. J thinks that's the time to buy Apple. Probably almost any time is a time to buy Apple. I'll qualify it. So I know I'm coming to you late, but I didn't want to let my loyal friends and Twitter buddies and StockTwits friends down. I know a lot of people want Dr. J's opinion as to where the market is going. So I gave it. Now you know what I'm thinking. I'm thinking we're in the process of completing round 2 of a 3-round fight, or an ABC type correction, if you want to use Elliott wave terminology. So Elliott wave believes that corrections come in 3 waves, 1 down, 1 up, 1 down, called a zigzag. I don't know if Dr. J believes in Elliott wave theory, but I think it works in this particular case. So look for the completion of round 2, like on Monday, Tuesday, and then begin round 3 down later in the week. That's how I see it. I hope I'm wrong. I hope it continues to go straight up to the stratosphere, take out all the recent new highs. Nothing would make me happier. Bye, everybody. Have a great weekend. Enjoy. Don't forget to subscribe.